Today we cover Charlie Munger, Warren Buffett's decades-long partner who taught investing like applied philosophy. This video covers mental models, inversion, incentives, and the mistakes Munger begged the industry to avoid. Munger said if you only read one book, the world will cheat you. Education only, not buy or sell advice. Stay to the end, some quotes can permanently change how you invest. Munger's path was not linear. WWII veteran, then Harvard Law, a sharp legal mind. He built early capital through 1950s real estate deals. He met Buffett at an Omaha dinner in 1959, an instant intellectual bond, sharpening each other for decades. Lesser known, Munger was not only Berkshire vice chair, he chaired Daily Journal, sat on Costco's board, and ran separate family investments. Lesson: a multidisciplinary path compounds if learning obsession stays constant. Munger's core idea is the latticework of mental models. Expertise in one discipline is not enough. Markets combine psychology, incentives, math, and competition. Munger collected roughly 80 to 90 models: compound interest, opportunity cost, social proof, margin of safety, survivorship bias. For investors everywhere, not just chart patterns, think business quality, management incentives, and macro together. The most powerful habit: put what you do not understand in the too hard pile. Can you explain your last 10 trades using 3 different models? Inversion is Munger's signature tool. Do not ask how to get rich, ask how to go broke. Leverage FOMO, no research, following tips, then avoid those. Munger said, tell me where I will die so I never go there. In investing that means bankruptcy, permanent capital loss, and emotional trading. Margin trading and hot IPO FOMO top many inversion lists. If you follow one rule, avoid stupidity, brilliance often follows. Munger's famous line, show me the incentive, and I will show you the outcome. Commission-based advisors push products. Fund managers paid on AUM favor size over performance. CEOs with short-term options favor buybacks over RD. For retail investors, when someone gives free tips, ask what their incentive is. Munger centered incentives in accounting fraud cases, WorldCom and Enron era lessons. Can you map the incentives behind your information sources? Munger mocked activity addiction, sit on your ass investing. Big money is not in buying or selling but in waiting. Berkshire's See's Candies was a small bet and a huge cash generator for decades. Munger recognized Costco early, membership model, customer trust, long compounding. Lesser known, Munger family holdings were extremely concentrated, not 50 stock diversification theater. Lesson: SIP discipline plus quality holds often beat monthly rotation. Are you mentally prepared to hold your best position 5 years? Munger was rational about misses. He ignored Google and Amazon early, circle of competence defense, but opportunity cost is debated forever. The Alibaba position hit China regulatory shock, Munger admitted misread. He was harsh on crypto and missed an entire cycle. Wins included BYD early, Wesco, and Daily Journal equities. Lesson: even the best thinkers have blind spots, process and honesty matter. Will you write your last miss and add it to an inversion checklist? Recap: 5 Munger rules. 1. Build a latticework, read across disciplines. 2. Invert, avoid stupidity first. 3. Understand incentives, never blindly trust advice. 4. Sit tight, give compounding time. 5. Circle of competence, the too hard pile is freedom. Munger said, take a simple idea and take it seriously. Simple SIP plus quality business plus patience, take that seriously, not flashy trading. Practical lessons. Keep an inversion journal, each month write what stupidity you avoided. Map incentives before any trade, who benefits. One non-finance book monthly, psychology, history, biology. Munger said, knowing what you do not know is more useful than being brilliant. Put leverage, tip groups, and quarterly earnings gambling on your inversion list. A simple checklist beats genius without discipline. That wraps Charlie Munger, mental models, inversion, incentives, patience, and honest mistakes. Next up, Benjamin Graham and defensive value. Subscribe and comment who we should cover next, Peter Lynch, Howard Marks, or an Indian legend. Education only, not investment advice.